Ladies and gentlemen, we're so excited that you're here. It's 11:56. We're officially kicking off TyCon Florida 2025 in the next 4 minutes. My name is Sarah Hand-Harold. I would like to welcome you. I know, yeah. Has anybody been at an event and done this? Hey, we're starting a few moments early so those people in the hallway can begin to move in here. Hey, and with the mic, I don't even have to use my Sunday school voice. But I know that the kids definitely listen to that. Welcome to TyCon Florida 2025. Yes. So as the program chair this year, I have to tell you some of the stories that you will see on stage are ones that I have worked on for years to get here. So we're starting with our theme is impact, influence, and beyond. Welcome to the historic Centro Asteriano. This building in 1902, started by 546 immigrants who came together. This building was a social club, a place to serve one another. And so when we looked at our theme, first of all, I'd like to design experiences. But when we looked at our theme of impact, influence, and beyond, what better place to showcase these stories than in an integral part of the Tampa Bay ecosystem, an integral part of the community around here, and in the redevelopment of historic Ybor. This walkable place, like my friend Leslie is here from SoftWorks, the community, the vibrant community that's building up here, understanding that the work that we do, the impact, that time of influence can extend well beyond the time that we started. So, I'm just checking. Because today, because we have sound bites, what you'll hear from us is that in this room are some of the brightest and most incredible leaders in Tampa Bay and beyond. So you can access information just from our companies this morning, whether it's going to some large language model and typing in some query that you get your answer. And you're all very well connected. So our goal isn't to give you as much information as we possibly can during the day. Our goal is to give you sound bites of really incredible conversations that challenge the way you think. Maybe some of the things you've just been thinking about, it will affirm those things for you. And then release you into your networking so you can connect and meet other people. Because we've seen at our Thai events, we've seen people make connections that change lives. And that's what we want for you today. We want you to leave different than how you arrived. So we're going to start with talking about the fact that Thai, while located here in the Tampa Bay area and having connections across Florida, Thai is a community-centric service organization, but our reach through being a part of a global organization gives us the ability to connect locally and to help our companies, our investors, and our entrepreneurs reach globally. So first to the stage, I'm going to welcome Pasco County Commissioner Jack Mariano. And Jack Jack is Pasco County Commissioner for District 5 since 2004. His focus, community development, infrastructure, public service, and a passion for economic development. Jack, tell us a little bit about what you're doing in Pasco County.
Well, thank you. Thank you very much, sir. I appreciate it. And thank you all for having us here. And this is a great building, great conference, and we're excited to share with you what's going on in Pasco County. As you heard, kind of a long time, 21 years ago, I got elected, and it was all about economic development and constituent service. That means like permitting, service with people, taking care of them. And I will tell you, Pasco County's grown with such a great vision to make great things happen. Our staff is phenomenal, our administrator is phenomenal, our economic development team, internal, external, great to work with to try to help business come in. We've developed incubator programs, so for food service, for life sciences, AM skills as well for manufacturing, all sorts of great things to help businesses come in, get started, whether they start small, start big, whatever they want to do, we try and help them forward. We're working on an industrial park that's up in Hudson. There's 210 acres. We did a board-initiated plan to develop this park with a private investor to try to create space for people to come in. If you go on I-75, it used to be an old Wesley Chapel District Park. Across the side, you see big reclaimed water facilities out there. Used to go across the street. Well, it's high and dry facilities there. We took that reclaimed facility and turned that into an industrial park, which we think is going to create even more jobs every step of the way. I will tell you, I serve with 4 other county commissioners that are very focused on economic development to try to make things grow. We work very closely with our Pasco Economic Development Council that we just great leadership, great team members to try to help business grow. So having the opportunity to come for conferences is a great opportunity for us to kind of reach out to you and hopefully start building relationships and creating opportunities and bring them to Pasco County.
Thank you, Commissioner. So as we have that impact locally, and those of you who aren't local, well, technically we're in Hillsborough County, but that's still local for some of you and from some of the places that you've come. What we'd like to do now is invite the, let me make sure I get it right, chairman of our Thai Global Board of Trustees to come join us on stage. Murali Bukapatnam. Did I? Close.
Sarah, very close. Thank you very much. Well, seriously, she did a great job. So, Chitra, very thanks for having us here. May I just stand here? I think it'll be better. I'll just hold, I guess. I know, sometimes things don't work the way you want it to be. Not in quiet do the stars emerge, nor in silence is greatness forged. But in the storms, we stand unbowed. A spark becomes the forge. So rise, you dreamers of daring hue. Let courage chart your course, for every empire once began with one rebellious force. May you all be that rebellious force. Good afternoon, Tampa. Good afternoon, Tampa. Good afternoon, Florida. Absolute honor for me to be here on behalf of Thai Global Board of Trustees, Thai Global, on all the 68 chapters, 17 countries, and 500,000 of entrepreneurial community we represent. Thank you. And Dharti and Vijay Menon from the Thai Global Board, thanks a lot. Can you all just stand up so that people can know you both are here? Vijay is our global lead, Dharti is our Board of Trustees. You all have something special in this room. This room is filled with passionate minds. Founders in flight, investors who believe in boldness, and mentors who still remember what it was like to bet everything on a dream. And I guess Chitra and Pat are a great example of that. Today is a celebration, but it is also a moment of recommitment. Thai is a global movement anchored in a local impact. So as you are mentioning, we want to create that local impact. Tampa has shown us that what resilience looks like. While you faced challenges last couple of years with the growth of membership, but you bounced back stronger. This year, and most importantly, you have consistently shown up for every global programs. I don't know how many of you in this room know that Thai Tampa was awarded the best chapter in the Thai Women program. So my round of applause for all the people who have done this incredible job. This kind of consistency is what distinguishes event organizers from true ecosystem builders. Tampa, you are builders, and for that, Thai Global salutes you. From Chandigarh to Tampa, Thai has only one mission. As our leadership conclaves in India, from the historic halls of Chandigarh and to the innovation corridors of Hyderabad or Ahmedabad, the message has been loud and clear. It is the world's don't need more followers. It absolutely needs founders. It needs magical thinkers. And those magical thinkers who are inspired within. Entrepreneurship is not a job. It is a calling. And today, in this very room, we gather not as professionals looking for a network, but as a purpose-driven leaders shaping what comes next. We are decentralizing a lot of things. We are integrating platforms. We want to place entrepreneur back at the epicenter of everything we do. Let's be clear. I want to be absolutely clear. Thai is not a brand. It is a movement. Thai is a belief, and that the courage of one entrepreneur can uplift a nation, disrupt an industry, and inspire a generation. Last night was having dinner. Sarah mentioned something. Sarah, as you mentioned, this is, in a geopolitical sense, is India's movement and America's opportunities. And your role, my friends who are in this room, the American entrepreneurs, especially in cities like Tampa, you all have a very unique role to play. You are at the intersection of global capital, talent migration, and technology. You are a founder. You must think beyond borders. If you are a mentor, guide your mentee to build for resilience, not just valuation. If you are an investor, back the underdog. I believe there were several such companies this morning in the investor showcase. Please go and bet on those underdogs and let that be the underestimated valuation game. So I have 3 specific invitations for each and every one of you in this room. Please join us at the Thai Global Summit. This is not just a conference. It is our flagship convergence. It is going to happen in Jaipur, Rajasthan in India from January 4th to 6th. You will all please book your tickets and be there. Tampa must be represented with strength, and this year, I request you, Commissioner, so that you bring a delegation to India, to our Thai Global Summit, so Tampa can be showcased and the power of resilience can be showcased. Come to Thai retreats. To all the charter members in this conference, I want to appeal that, Chitra and Harish were there last year. You know what true friendships can be when you build on this global retreats. Continue your participation in global programs. So Priya and all the other gang, please make sure that Thai woman flag is raised much higher. TYE is raised higher. Thai University is last but not the least. For all those successful entrepreneurs in the room, I have only one appeal. That is, please become charter member of this great chapter, Thai Tampa. Be part of this net giver society. I appeal, let us build a virtuous cycle of wealth. In Sanskrit, there is a word called putra, a term for son, means one who saves us from hell. In ancient times, legacy was passed through this lineage, but today, legacy is created through impact. Every startup you build, every mentee you support, every risk you take, and that, my friends, is your immortal footprint. So as I look around in this room, I don't just see attendees, I see architects of the future. So let us all build boldly, let us lead with empathy, let us inspire from within. Thank you, Thai Tampa. Thank you. Let us make this ThaiCon a launch pad for audacious dreams. Thank you once again for having all of us here at Tampa. Good afternoon.
As we talk about local to global, and then back again. I'd like to introduce Daniel Mitchell, who is the head of the Pasco County Smart Start program, as he talks a little bit how they work to help companies grow, not only here, but into new markets. Daniel.
Thanks, Sarah. What a beautiful building, but you guys are so much more beautiful than the building, so nice to see all your shining faces. So I run a program called Smart Start, and we help entrepreneurs in Pasco County start businesses, but one of the programs that we offer that I absolutely love helps international folks relocate and establish their U.S. headquarters right here in Tampa Bay. It's called our Smart Landings program. One of the things that makes entrepreneurship so magical is it's a chance for all of you, that many of you did it, but it's a chance for you to change your stars, to change your outcome. And so our Smart Landings program allows folks to have companies internationally to move to Pasco County, specifically Tampa Bay region. We give them 12 months worth of no-cost incubatorship, which includes our workspace, education, guidance and coaching, collaboration with other US-based entrepreneurs, and even access to funding. So that's our Smart Landings program. Now, I just want to share a poem. It's one of my favorite poems. It's short, don't worry, but it's from, it was included in the classic Think and Grow Rich, but it says, "I bargained with life for a penny, and life would pay no more. However, I begged that evening when I counted my scanty store. For life is a just employer. He gives you what you ask. But once you have set the wages, why you must bear the task. I worked for a menial's hire, only to learn dismayed that any wage I had asked of life, life would have willingly paid." And that's entrepreneurship, right? Anyway, thanks for having me.
We'd like to thank our representatives. Gentlemen, if you could stand. Commissioner, thank you for joining us today.
Thank you. Thank you.
Now I'd like to welcome my friend Blair Bloomston, who is the founder and CEO of Leaders Uplifted, a seasoned entrepreneur, expert coach, and consultant, having designed multi-year learning programs for heavy hitters like NASA, NASCAR, Deloitte, Hilton, and the U.S. House of Representatives. Blair is going to be our hostess for this afternoon. Blair, will you join us?
Thanks, Sarah. Hi, everybody. Thank you so much, Sarah. What a wonderful handoff. I just want to say how amazing it is to be here today at TIE Tampa Bay and to get to know more about your incredible organization. And for all of the founders and entrepreneurs and leaders out there, I am in it with you. Let's give ourselves a round of applause. We made it. We are here. Awesome. So we are really getting into the flow of the day, and it is my job as MC to keep the energy and engagement high. So I'm going to not beat around the bush. We're going to get right to it. As we go through the day, I want to give you the gift, though, one brief mindset that I know you already possess. I think you can tell I brought my work clothes today. I have a big job to keep us energized, but I always know that the inner work is where we begin. And I am a gamer at heart. I deal in gamification. So I want to invite all of you to see today with just a touch of a game-based thought. I want to invite you to think of yourself with that main character energy, that superhero powers of attention, and that is one of the things that's going to lead us through. Now, with that, there's also some housekeeping, so let me just get right to that. We are human in this room with our superhero powers, so I encourage everybody to snack, hydrate, do that as needed. Also, restrooms are going to be at the back of the theater. You have to exit the theater to get there on your right and on your left. For speakers and panelists, we have an amazing show. There is so much knowledge on deck today, but I'm looking at all of you in the room and those who are going to join us to let you know you'll come up this way to enter the stage and go back down that way. And then for everybody else, we are here to cheer. You might be sitting for quite a bit, but I'm going to encourage you to get your Fitbit steps and your cardio by clapping. Is that cool? Okay, we can make that happen. With that, yeah, okay, see, somebody is in. That's a winner in the room. I like that. Overachievers here at TyCon. Okay, with that, we are going to be taking photos at the end of each panel. You're going to see that repeated. But team, this is also a great opportunity for you to get that social media selfie in, right? As pictures are going on up here, you can do it too, just so we know the flow. Now, with that, this is important. I want to ask my team up there to advance to the sponsor slide, because as always, these events are not possible without sponsors, partners, and I would like to start by saying thank you to these individuals and companies. I'm going to ask you to hold your applause until the end, and we're going to give a really big celebration then. But supporting today's event, we have Blackstock Footage, Bronze Media Group, Catalyst, Debut Labs, Embark Collective, Entrepreneur Collaborative Center, Tampa Bay Business and Wealth, Founders and Florida Venture Forum, Indo-US Chamber of Commerce. Ooh, I dropped the clicker. Again. I'm still here. Health Compass Consulting, Leaders Uplifted, Pirate Marketing, Sci Farms and Happy Homes, Tampa Bay Innovation Center, Tampa Bay Wave, Tampa Bay Community Network, TEDx Tampa, Team Logic IT, the University of South Florida, and of course, the Tampa Bay chapter, who have given so much to make today possible. I'd like to invite you now, the only time I'll do this, to please stand and applaud for these sponsors and consider this your cardio break for the day. Yes. Get that. Oh, look at this room. This is a good-looking room. The sponsors should feel this love. Thank you so much for that. That is exciting. Okay, grab a seat. We are moving on. So that's the energy, and that's what I want. Now, let's really get into this. We have panelists waiting just behind the wings. Let's start where all business journeys converge, on capital. The capital stack is changing. Venture studios, family offices, operator-led funds, and patient capital now sit alongside traditional VC. Today's conversation is going to explore how these models work, who they fit, and what factors shape the deal flow. So get ready for About the Money, Rethinking Capital for a New Era. And with that, I want you to please welcome our moderator, Brian Miller, along with Joseph Olassa, Gwena, and Kyle Asman to the stage. Let's welcome them. Come on out, gentlemen. Thanks so much. Thank you. All right, good. So you've got microphones there. I want to encourage the crowd as these talented leaders come out to let you know that you can go to the conference app to get their amazing bios. There's a lot of accomplishments up here, but for the sake of time, I'm just going to hand it right over to you, Brian.
All right, thank you. Thanks everyone for having us up here today. We're excited to chat about this topic. We have chatted before, quite a bit actually about the different kinds of capital that we all really represent. And I think to get started, Joe, we'll start with you. Just let everybody know what kind of capital you represent and what you do. And then we're gonna just open up a conversation here about some of the nuances between the types of capital that we dabble in and how some of you might be able to get access to that capital and how we might need capital from you as well to achieve our goals. And we'll go from there. Joe, you get it started.
Hi everyone, my name is Joseph Olassa. I go by the name Joe. I represent Nuvio Ventures. So we are what's called a venture studio. It's, I think, upcoming term. I think a lot of people get very confused because there is venture in it, but we are not venture capital. I think some people say we are the space where failed entrepreneurs come to, right? So we are like an incubator wherein we incubate our own ideas, take it to initial revenue and to break even, and then we take it to the external market, right? So that's where we come from. So slightly different model on the venture space, and that's who I am.
All right, thanks, Joe. And next in line, You want to introduce yourself and what kind of capital you represent for us?
Sure. Gwena, run two firms, GBA Capital and Transfora Partners. We are private equity. That's what we do. So we invest in mature companies. So the companies we invest in tend to be minimum 10 years old, but typically 10, 20, 30 years old. And we really focus on providing liquidity to owners of small and medium-sized businesses, the businesses that you drive past, walk past every single day. Our sweet spot is businesses that make sort of 1 to 3 million in profits, that are owned by someone that is at a point of retiring, and we help provide those owners with liquidity to allow that business to change hands so that the employees and the sort of local economy that the business serves continues to do so post-transition. So that's what we do.
Thanks, T. And then we have Kyle with us, and Kyle's got a completely different twist. Probably the most common of what you guys always hear about here in Thai. We're always pitching to try to raise money for a startup. So, Kyle.
Hello. Kyle Asman, Backswing Ventures, based in Windermere, Florida. We've had 3 successful funds to date. We invest pre-seed to Series A, really meaning in the defense technology space, really meaning we look for companies that have a product or a service and are generating revenue at the time we invest.
Awesome. And as you guys know, well, I'll introduce myself as well. These guys know I kind of dabble in all 3 of these types of capital. I've been retired from the Coast Guard for 1 year now, and so that makes me the expert on private capital. And I worked a little bit at a venture capital fund, so I know a little bit of the vernacular. I helped Tampa Bay with their angel investing group, and I founded my own private equity firm where I invest in and operate small companies, and sometimes ask for capital from guys like this. So, Joe, do you have a fund?
So the way we do is we initially do all the investment on our own. So it's like accruals from whatever we have and then invest in these startups, right? So we become like an angel investor to our own startups. And once a startup gets to initial revenue, like Kyle said, I think today there's a lot of interest in the market around startups that get to revenue or break even. And better still if it's profitable, right? And I think there is not enough of those. I think today there is a lot more market wherein there is startups with ideas looking for funds, right? So that's where we come in. We kind of try to take our money to create a fund those ourselves.
Okay, so if I got this right, you're trying to figure out what the end user needs first, then you're using your pooled money that's internal to your firm to create those products.
You're absolutely right. And I think the only difference is that we focus only on enterprise sector, right? So we don't kind of go all around into other areas. So only enterprise and enterprise software, right? So we go to these existing connects in the enterprise, get those problem statements, and then start to build the products.
Kyle, how's that different from the entrepreneurs that you're saying? I mean, are they not identifying a problem, trying to solve it? Just like Joe is? How's it really different?
They're identifying a problem and solution. I think it's really a difference in stage. So, they play an important role in the ecosystem, kind of helping people figure out their business model, figure out exactly what problem to solve and how to navigate the capital market space. And by the time somebody gets upstream to us, like an ideal target, they understand the capital markets, they understand their product, they understand their solution, and they're really ready to commercialize it, and it's about growth at that point.
Okay, I got it. And you have a fund? You said you're on your
third fund.
Third fund. Are you still investing in your third fund the same way you invested out of your first and second fund, or have things changed?
Yeah, so I would say things change from the first to the second. Anybody who invests in a first-time fund, it's kind of a crazy bet because you don't know what you don't know. And the big thing is in our first fund, we didn't have an industry focus. We just had a financial criteria. And then fund 2 and fund 3 have been very specific industry-wise, which has obviously helped us get better deals, better IRR, et cetera. But it was a good the first fund was a good learning experience.
All right. T, you're running 2 different kinds of businesses. And where are you getting the money from for the 2 different businesses that you're running?
So I've had the privilege before doing this, I was an entrepreneur. So I've had the same effective investors throughout my career from sort of entrepreneurship through to GBA Capital through to Transora. So to answer your question, I've had the same investors that have backed sort of what I'm doing the entire time, and that's a combination of high net worth, and initially we were going to be, our anchor was an institutional asset management company. That didn't quite sort of work out for a number of reasons. So ever since, it's been effectively high net worth people that want exposure to private equity. And specifically in what we do, we've always provided a yield to our investors. So we've never run a fund, nothing against that, but it's just, it didn't work for us in that our investors were looking for an annualized sort of cash on cash return. And so we were able to provide a structure that allows us to do that. So we don't have to rely on liquidity events or, selling to return capital back to investors. It's cash flow. So that's how
So
we
you're
operate.
calling cash from these investors as you need it.
Pretty much, yeah, pretty much. So I guess quite.
They're not committed per se.
No. So it's not a committed fund. No, we call it as and when we need it. But the interesting thing is because it's been the same group, every call is met because they know exactly what we're doing, and what we're doing is somewhat unique in that it's annual cash flow. So they're always happy to give us exposure because they want the annual return.
Right.
And just to add, that works in conjunction with sort of, Kyle, I don't know how you guys operate, but you're probably a closed-ended fund. So it's, our investors want a mix of what we do, but also a traditional exposure to sort of longer-term closed-ended vehicles.
For all the issuers and people raising capital, that's a good point. I think the biggest thing is making sure you have the right investors. And like when I talk to a company, they're asking, what are you looking for in terms of a return? What is your timeline? I mean, just as much as the companies or the investors interview the companies should be interviewing the investors to make sure you have the right types of investors. I mean, our investors vary from individuals all the way up to institutions, but the difference between T is he has a cash flowing product that's modelable, and you know what you're going to get. You kind of have an idea what your return are. When you invest in seed stage venture, you have no idea what your return's going to be. Our fund one, we're 5 years in, and investors have received 158% of their capital back, and we have a markup on the remaining capital like 3.1 times. So hopefully we'll return somewhere between like 4 and 6 times total return, on total investment. But your investors need to understand that, and you need to understand what your investors are looking for too.
It's interesting that I heard from Joe. We'll have to see how you might respond to this too. But for T and Kyle, you both have pivoted from what you initially started doing, and you got your first company off the ground, or your first fund off the ground, or your first thesis up and running, and then pivoted into another thesis. And Kyle, I think you're now very specifically investing in defense technology. Is that right?
Yeah, I don't like to think of it as a pivot, because anytime I hear pivot, I feel like somebody did something and then it didn't work out, so they went to something else. But I think it's a refinement of your focus, right?
Evolution.
It's evolution, it's refinement. You're just getting better at what you do, and anytime you get better at it, you're going to just be more focused into a certain sector, right?
Right. And then T, I think, with your evolution, you started out with maybe more traditional private equity and then more into this long hold model.
Yeah, correct. True. And again, pivot, or what was the word used?
Evolution.
Evolution. I'll go with evolution. So yeah, we've evolved somewhat in that I run 2 businesses, but the next sort of 10 years, we're going to be focusing on the second, which is Transora Partners. And what we do there is we're solving a specific problem. So just quick numbers, 30 million businesses across the US, 6 million of those have employees. 50% of those, so 3 million businesses, are owned by people that are at or above retirement age. So if you do the numbers, most people work for a business that is owned by someone that is at or about to enter a phase of retirement. And that's specifically who we're solving. So when we speak to business owners, we're looking at business owners specifically that are at a point of retirement. And that's our focus because, like you said, we've evolved and we found our need, we found our sweet spot, and that's exactly who we want to serve. Because, again, back to some numbers, businesses come to market, traditionally small businesses come to market with a business broker or an advisor or someone like that. 80% of those businesses that come to market do not sell, and the eventual sort of what ends up happening is those businesses end up closing down. So we've specifically identified a problem that we want to solve. We want to provide capital to people that are looking to exit, that are at a stage of retirement, because we want to preserve jobs.
Yeah, it's interesting. I feel like with the baby boomer generation, at retirement, there's so many businesses for sale. So for what I do, similarly, I'm looking for businesses that are for sale by retirees. I'm not doing it the same way as you. I intend to operate the business, and sell it once I fix it and put an operator in and stabilize it. Whereas you're looking to draw cash flows for your investors off of a stable business already.
Correct, and it's one of those industries that, or specific sector in the industry that is, it's massive, but we don't know it. Like, if you look at sort of the entire value of all these businesses, you're talking $9 trillion is sort of the enterprise value of all these businesses. 3 million businesses, about 30 million employees work for these businesses. So it's a massive, massive part of the economy, and that's what we're trying to solve.
So Joe, as far as like pivoting or evolving, how have you seen, your studio evolve?
Yeah, I think, I like the word evolve. So it's not like we got into fund as a natural progression, right? So many of us who started, we came from IT services. So I used to work for a company called Mindtree, but we felt that services was getting commoditized. The growth was not as much as before, right? So we wanted to start to get into products, tech products, right? So whatever extra cash we had, we started to put to create these products, right? Before that, many of us used to actually be angel investors and fund ideas, right? And many of us would look back and say that, hey, there was a better way to do that startup. While I think the founder was sometimes a bit too stuck with the idea and may not really look at the business idea behind it, right? So as we started to progress, we started to see that we're putting substantial amount of money to incubate these different product companies, right? And that's where I think the whole financial modeling started to evolve to say that, hey, there's a better way to structure this. It should be ideally a fund that is actually, putting money into all these startups, right? And then as these startups started to get to revenue, right? This is where I said, we could potentially bring in people who have entrepreneurial experience, right? Because not every entrepreneur succeeds. Some would have tried it and said, if only I had a bit more cash cushion, if only I had a bit more mentoring, or if I had something that already had some legs, right? That's where I think we create like a fund too, wherein we are saying that we're taking money from external investors, and then we bring in these people as co-founders and give them sizable equity as well. So at that point, the venture studio kind of almost takes a backseat. It becomes, part of the external investors through the fund too, and through the new team that comes as a co-founding team.
What's next for the companies that you incubate there? Is it to talk to Kyle about?
So there is two ways we have tried to approach it, and I think most of this, like he said, comes from the network, right? And most of our network are folks who are like pushing us to look at a fund kind of model. So they are high net worth individuals who will put money into the fund, and the fund will then invest into our portfolio, right? Such a way that we then need to commit to a return to them. Because if you look at typical angel investment, right, you put money and then it's a hit or a miss, right? Compared to when you go to the fund, the person who runs the fund has a commitment to give a return, right? Because then you can't do a fund 2 or a fund 3 and so on and so forth, right? So that's how we do it. But then I think as a venture studio, the bigger focus for us is the initial revenue and then take it to break even, right? Because I think that seems to be the absolute first starting point. Is there a paying customer? And if it's getting paid, is there enough money to make it break even? And then push it to at least $1 million revenue. And that's when we look at, either our own funds or external investors.
Okay, I got it. T, have you invested in any or looked at it in your private equity ventures, any companies that have been incubated through a firm like Joe's or that have been funded, like a startup that got funded like from a firm like Kyle's?
No, and that's by design. I don't have the level of risk appetite that Kyle and Joe have, so that's why we look for sort of old businesses. And like I said, we look at sort of 1 to 3 million in profit, and that tends to be from businesses that have been around for a long time. That's just because that's how we underwrite. There's a different discussion going on where we are starting to look at exposure to more VC-type businesses, but that's a separate discussion for down the road. But to answer your question, no.
Yeah, that'd be a pretty early exit to get, out at your stage. Kyle, can you tell us some success stories of some capital you've deployed to help entrepreneurs exit?
Yeah, so I mean, most of the exits we've actually had have been in the secondary market. So we've sold shares in a lot of our portfolio companies to return capital. I mean, the life cycle of these companies is actually pretty long. And I used to ask the question, like when we would have introduction meetings and say, you know, when do you think you're going to sell or when do you think you're going to exit? And then I realized it's actually kind of a shitty question because the entrepreneurs have no idea what the answer is. And like people get pushed on it. Like, you know, I don't like when people ask me if I'm going to sell my business because I've built it myself. So I think that, you know, a lot of entrepreneurs kind of feel that way too. So, I mean, you really never know. I mean, some of these companies can go on for 20, 30 years. And, you know, they end up in the hands of a private equity investor or they IPO or they just run the business as a lifestyle business for a really long time without any goal of selling it. So, you know, we've had some good success stories in the defense space. You know, Zero Eyes, we were an initial investor at a $6 million valuation. They raised around last summer at $350 million. We recently exited Firestorm. They're a drone company that we were in their seed round and just exited in the mid 9 figures. So we've had some good winners.
That's fantastic. So it's interesting you mentioned the secondary market. When I was at my long 6-month career in venture capital, we had a few exits and they were all to sell secondaries. None of our portfolio companies were really ready to exit, but we were ready to sell some shares and return capital because we had a fund and we had that mandate to do so. So we were able to host a couple of secondaries and get some liquidity to our investors. How do you guys see that? I've been seeing a lot of news about that the secondary is the new primary.
Yeah, I mean, there's fewer public companies now than there were 20 years ago because going public as a company is actually, it kind of sucks to do. The regulatory requirements and the governance requirements are arduous. So you end up basically running a compliance shop. And you know, you have to report earnings every quarter, so you can't actually grow and develop because everything has to make it an impact 90 days from now or the stock price is down. And then there's also been changes in the private capital markets that have loosened things up. So there used to be time restrictions on how long companies could stay private and the amount you've raised. Those are gone. And the pool of capital now, I mean, that's one thing that's not inflation adjusted. To be an accredited investor, it's like $200,000 in annual income, but it's been that way for the last 15, 20 years. $200,000 in income in 2001 was a lot. $200,000 in income now is not that much. So the pool of capital to support these private companies is really endless, and no one wants to be a public company. So that's leading to these companies staying private longer, and then all the things you hear in the news about, you know, there's a lack of liquidity for funds and such. But the secondary market, I mean, there's really liquid secondary markets, particularly at the later stage in companies like OpenAI or SpaceX. I mean, you can almost trade those like mark to market daily like you would Tesla or NVIDIA.
Right. Yeah, so I'm thinking about the difference between patient capital and this idea that there's just more money available. T, I know that's actually your thesis, patient capital. I think it's like it's on your website, I think. So how have you also seen more money available as well?
Yes, so there is no shortage of money, and it's one of those mind-boggling things. Once you sort of work in the industry, there's about 1.3 trillion at the moment, sort of in private equity dry powder, which is money that has been raised by private equity firms to invest in businesses, and has not been, and it's just sitting there waiting for deals. So there is no shortage of capital. The reason that we're able to be patient comes back to what I said at the beginning, because
The dividends.
Dividends, exactly.
Yeah.
So how long would you want to earn dividends for if you can? Well, it's infinite at that point. So that's why we were able to deploy patient capital. It's because we can return it on a somewhat infinite basis. But if we were structured differently, that wouldn't be the case. We'd have to sort of exit.
Joe, is the number of businesses you're able to put through your program limited by the amount of money you have?
Yeah, very true. And in fact, you know, on his point around patient capital, right? I think the space we are in, which is we are in software products, right? There is an initial investment to get the product ready, right? You can't actually go to the market and say, I have an idea, will you buy it from me, right? You have to actually give a tangible product. So there is a cost to develop the product. And then in software, you can't just develop one thing and say, oh, I developed it and now this will run for the next few years, right? You have to continuously invest to continue to build the product. So till the product gets to that break even, that you have to continue to invest. And that's like a huge cash burn, right? If you're not familiar with that space, that's something, like he said, very, very, you know, almost heart-aching to see the kind of cash that goes through, right? But then, of course, the returns is any software product that takes off, that's like a huge take. It's not like a linear growth, but almost an exponential growth.
So we talked a little bit in our pre-call about finding the right investor for your startup. So for the entrepreneurs in the room who are looking for money, it would be smart of them to find the right partner, the right financial partner to back them. And I know, Kyle, you talked about defense technology. T, we're talking about retirees with stable cash flows. Joe, we're talking about incubating these ideas from the ground up. For the entrepreneurs in the room, what advice could you give them that would help guide them to the right financial partner to incubate or to grow their idea?
I think you can get money pretty much anywhere. I mean, 1.3 trillion in dry powder. The capital markets are robust. I think the right question to be asking investors is outside of capital, like what do you need? So say you're going to start a company in the defense and government technology space. Maybe you're a technology person, you have no experience in government. So you want an investor who has a good understanding of the contract procurement process to help you navigate that. Or on the flip, you're a veteran like yourself and you understand the government side really well, but you need somebody who can help you on the capital market side because you don't know the first thing about finance. So you need an investor who's going to help you through the numbers piece of things. So finding the right partner for you based on where they can add value outside of capital, because anybody on this stage, and I'm sure there's others in the room, can give you capital, but can they give you the other things you need to ultimately be successful?
T, you want to respond to that too?
No, I 100% agree. 100% agree. You need to tie what you're doing with the right person. And there is no shortage of capital, like I said. So it's more important to figure out can the investor help you in other ways that perhaps someone else couldn't.
Yeah, and then it's not just the entrepreneurs coming to you guys for their exit or for their funding, but it's also you guys going to your investors to get money too. You have to get the right partners above you as well, right?
Yeah, correct. So we can't get money from VC because I can't provide the returns that a VC investor would be looking at. I can't 100x the business or whatever, but I can provide a consistent yield. So 100%. There's no point in me trying to call Kyle's investors to get money. They'll just say no. So yes, 100%.
I think that's a big problem people have is an expectation problem, right? You're telling your investors when you raise money something totally different than what I am, right? I'm telling my investors 5 to 7 years, 3 to 4 times. And by the way, in venture, I always feel the need to say this. People have ridiculous expectations of what the actual returns are. To be in the top 1% quartile on any vintage year in venture, it's about 1.9 times cash on cash returns. It's not that crazy. A really good fund is doing like 2 times, 2.5 times. They're not getting 10 times, maybe on one deal in the fund, but you're not 10xing a fund.
Yeah. Quick follow-up question. So you're not 10xing the fund, but you're saying a couple of investments in those funds could have 10x, 100x.
I mean, that's how most funds make money, right? They have a couple big winners, a couple that do mediocre, and a couple companies that go out of business, but they make the bulk of the return on those big winners.
So when you underwrite the fund, you're underwriting at sort of the global level of the fund.
Yeah, I mean, venture is a 90%. It's a seed stage and 90% fail rate.
Interesting.
Guys, thank you for the conversation. We're out of time. Thank you. Let's get a round of applause.
Just like Brian said, let's celebrate the panelists, Brian, Kyle, T, and Joseph. How much amazing insights. Guys, stay up here for just a second because we have a little gift for you. And of course, we want to get a photo to commemorate the moment. While we're doing that, I hope all of you are taking in these brilliant insights. I really like the humanity with it. We heard about pivots. We heard about you don't know what you don't know. And at the same time, we have visionaries up here. Yeah. All right, come on out, everybody. Thanks, good. Okay, we've got the distribution system down too. That's a part of TyCon here today. Wonderful. And let's have you gentlemen stand for a photo as well. Great. Photo team is on deck. Thank you, photo team. We're celebrating you. You're going to be busy all day. Wonderful. Here we go. Yes, clap it out for them. Celebrate those insights.